Hi there, I'm Tyler Bollhorn. Welcome to the Stockscores Market Analysis for the week of June 27th, 2010. Let's start off with the index that I think is the most important to follow. That is the S&P 500. We are seeing it here represented by the SPY Exchange Traded Fund. Now you can see, let's just sort of get a longer term picture here. The long-term upward trend line, of course, was broken about 2 months ago. We had a pretty good pullback out of that. That downward trend line was broken about 3 weeks ago, and that should lead to a move back up toward the highs. But of course, it could just be an interruption in a longer term downward trend. Now, in the last 5 or 6 days, we've had a shorter term pullback, which is to be expected. That often happens after a break of a downward trend line. And what is critical now is whether this market can stop that pullback before it moves to new lows. You can see that we have support right about here. We are above that as of today. And so the break of the downward trend line that occurred a few weeks ago is still intact. What we want to watch for right now is looking at that short-term pullback over the last 4 or 5 days and see if that can end. Now, what I like to do in order to understand what's happening there is look at the intraday chart. And here, this is now a 5-day chart in 5-minute increments. You can see over the last few days here that that downward trend line is broken. And we have right here that break of the downward trend line, and we're now working on a little consolidation over the last day and a half that really forms a sort of pennant pattern. And what is critical is what the market does out of this little pattern. If we break to the upside, then we will have the second signal of a reversal, the first signal being right here and the second being here. On the other hand, if we break to the downside from here, that will imply that the downward trend, which has been underway for 5 or 6 days, will continue lower. So what you want to watch for over the next little while on the S&P 500 is whether we get a break to the downside or the upside from this little pennant pattern that is forming. All right, now the next chart that we're looking at is a chart of the financial sector in the US. And the reason I bring this chart up is because it was really the sector that started the break of that little pullback downward trend line on Friday. You can see around midday on Friday, this sector broke its downward trend line. I'll just draw it on here for you. So right about there, we had a pretty important break to the upside from a rising bottom. However, today those gains really couldn't hold, and we're starting to get these falling tops forming. So that's a bit of a concern to me because the sector that led the break is starting to lose some of that momentum and calling into question whether that downward trend line is really valid. Now, the leading sector today, and that being Monday, was the semiconductors. And many people have said, well, technology should lead the market out of its current doldrums. And here we see a pretty optimistic little pattern because we have rising bottoms. And again, this is a 5-day, 5-minute chart. So we're looking very short term this week because we're at a critical point where the market is trying to turn around. If the semiconductors can break to the upside, that should help the S&P 500 break to the upside out of its pennant and begin that turnaround. If, however, this cycle of rising bottoms is broken to the downside, then I'd be looking to go short the S&P. So in the next few days, we're going to get our cue as to what to do either way. If we get a break to the upside from the pennant pattern on the S&P 500, we want to be buyers. If we break to the downside, we want to be short sellers. Some of these sectors, like the financials, like the semiconductors, will probably lead the overall S&P 500, and so you can watch those for a little clue as to what's going to happen. All right, let's take a look at what's happening north of the border in Canada. This is a chart of the TSX 60, and we have a much healthier long-term chart, although certainly not as exciting in the TSX. It's really been stuck in an optimistic trading range for the last year, and like the US markets, we've had a pretty sharp pullback the last few days, and it's not really showing a sign that that pullback is breaking. In fact, we can jump to the 5-day, 5-minute chart on the TSX, and here you can see that the downward trend line was not broken on the TSX like it was for the US markets. And so the Canadian market is lagging a little bit here, and that's mostly because some of the commodity prices, particularly oil, are having some trouble breaking their short-term weakness. Now, many people in Canada like to trade the speculative venture exchange market. It's where all the junior mining deals tend to be listed. And here we can see that that long-term upward trend line was broken about 6 weeks to 2 months ago. And we are now forming a series of falling tops. You can see each top that the market makes is lower than the previous. We're in a little pennant pattern right now. My expectation is that we'll probably see a break to the downside and this market will continue lower. So I would not want to be an investor in the speculative stocks in general. However, of course, these stocks tend to trade on their own story, so it's possible that while most of the stocks on this market don't look great, you can have individual names that do well. What you have to stress is finding those that have abnormal volume or trading on their own story and trade those accordingly. All right, finally this week, let's take a look at some of the commodities, particularly gold and oil. And here you can see a chart of gold, or at least the gold ETF, to symbol GLD. The buyers are in control. We have nice rising bottoms, a good upward trend. We are losing a little bit of steam in that upward trend. You can see that the tops are not rising as quickly as the bottoms, and that's a sign that the buyers are losing their enthusiasm. But until you get a breakdown from the downside through that upward trend line, you don't need to be too worried about that. What I'm looking for in the short term is to see whether the market will break to the upside from this pattern. And momentum is on its side, but we do need to get that break to the upside. And the market's having a little trouble moving to new highs on gold over the last few days. And so I'd be a little bit cautious with gold because there is some risk that that upward trend line gets broken. I am optimistic on the sector. I do believe it's strong, but I am watchful of whether that upward trend line will be broken because that will be a good cue to exit the gold market. And finally this week, let's take a look at oil. Oil is in a little upward sloping channel here, but it's kind of a hockey stick type pattern, or I call them a flag. You've got a longer term downward trend and we are trying to break back into the old trading range. I don't see great upside potential in oil in the short term. It may come up a little higher, but I think we're likely destined to be in this range for a little while. So to summarize then, the overall stock market is kind of in a very critical point right now. It doesn't look real healthy, but it is trying to break the downward trend line. In the next few days, we should get an answer on where the market's going to go. You want to keep a close eye on those intraday chart patterns to see whether we break to the upside or the downside from that pennant that's been forming over the last day and a half, and act accordingly. As a trader, I will be looking to either buy or short some of these ETFs based on how they come out of that pattern. I'm watching the intraday 5 and 15-minute charts for that cue. It's a very short-term view, and that's really the nature of this market. Because the market is pretty whippy, it's going back and forth for 3 or 4 days at a time only, there's no sustained trend. You got to be a much more short-term trader right now and try to take little bits of money out of the market as you can. Well, that has been the Stockscores Market Analysis for June 27th, 2010. For more information on the tools offered by Stockscores, give us a visit at www.stockscores.com. Have a great week in the market and trade well.